Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the mini S&P 500 futures contract, front month in nature. Looking at the last print, excuse me, of 1136 on the market. The reason we wanted to go ahead and pop out this video is what a beautiful short setup we have right here at 1136 to 1137, we'll call it, in the E-mini S&P 500. Had this impressive move lower to the downside late yesterday, Monday. Today is, of course, Tuesday, the 28th of day of September 2010. Late session sell-off really continued into this morning, and we've just now got the snap back into the trend, which is, as always, or generally speaking, can be a great setup on the short side, particularly if you have underlying dynamics, our proprietary indicators, suggesting that the bears are in control. Now, we are seeing a bit of a divergence in some of our indications. In fact, a little bit of bullishness there, some diverging bearishness there, not impressive bearishness, but still great short selling opportunity to get in the market. So that's going to be our free trade of the day. Sell short the ES at 1136 to 1137. Go ahead and stop that out at the high of the day. We'll call it 1140. That's kind of a key level, as we've often mentioned in this space. The 1140s and 1180, or the 40s and 80s, really the market loves to key off of, and we're certainly expecting a move back to 1100 to retest the former support, or sorry, the former resistance that we've had in this channel for several months. In fact, from an official market timing basis perspective, we haven't gone to bullish yet. Actually, a little known secret, but we're still holding neutral. Traditionally, we would have gone to bullish right around 1100, actually probably 1095 or so. The market's now at 1136 or so, but 1130 to 1140 we'll call it. So, but nevertheless, the choppiness that we've had lately really suggested that we wanted to stay on the sidelines, which we have, and we're just waiting to pull back to retest the former resistance, which should now be on support duty and get in the market at a bit of a better price on our OMT. Official market timing. But nevertheless, we are looking at a retracement. In fact, we can go over and look. If I minimize this, well, actually we can just do it. Well, I'll just minimize this. And there you have it. There's our R2K Day Trader 6.0. And as you can see, it's a beautiful fib band retracement, 50 to 618, right around 64.40. We'll call it right now as a short setup in the TF, the Mini Russell 2000, and so 665 will be another good short up. Had a short setup, had kind of an errant move, but quickly reversed in bearish fashion. So really a great opportunity to get in now, and of course stop your loss. We'll call it the high of this bar, which is too many sixes there. We'll call it 667 as a stop right there. 665 is the short setup, just to get back in on the short side. Nevertheless, that is a key component of our MSA UDT. And look at this beautiful long setup, 658 to 668 on Friday. Little bit of a loss this morning, little tiny loss was the case this morning. Going to go ahead and minimize that and look at a chart of the daily. Here's the daily market that was aforementioned, and of course the reason we got the bounce this morning was the market was just simply quickly drawn to our short-term measure of trend. Simple red line right here, 1132.72 is the short-term measure of trend. You saw last Thursday, the very same thing happened. The market came right down there and bounced impressively. Here's the top of that channel. Look at this channel we've had for so long. We did mention, however, I must point out, we did mention the potential for the market to go higher. We didn't expect the market, if it did break below 1020 to 1040, we're going to see a continuation move and certainly a negation of this formation. Nevertheless, an inverted head and shoulders formation was the case on the daily chart of the S&P 500. And of course, as you can see, once the market tipped up, boom, it's off to the races, and you see a move around 60 to 80 points or so in the market. A very impressive 80-point move in the S&Ps. Are we back to bullish? Not quite yet. Generally speaking, we would have been bullish right around, we'll call it 1090 to 1100 or so, right on this break above here. But given the resistance, this band of resistance right here, we weren't particularly interested in going to the bullish side, even though we had this incredibly bullish formation of this inverted head and shoulders on the daily chart. Nevertheless, that is the case right now. We do remain neutral, unofficially totally bullish. Every indication suggests bullishness. Price technical is bullish. The trend's bullish. The momentum's bullish. The directional movement is both intermediate and short-term bullish. So bullish. The bulls really are in control, but really they just need to prove themselves. We've had quite a bit of some negative news. Definitely anticipating a double dip. Recession, another recession that we're going to have to endure. That means certainly lower equity prices. We've had outflows as the market's been trailing up. We've had outflows for the last 6 weeks or so. So there's really not much for the market to stand on. Sentiment actually is kind of pessimistic, which is surprising to see given the move of 80 or so points. But we're actually seeing some relative highs in fear. We say relative. Certainly we need to see some serious spikes in fear before we would actually go to the bullish side. As you can see, our sentiment system is back to neutral after getting stopped right there. A couple beautiful three beautiful winners right there. But we're going to go ahead and switch over and look. So how have our portfolios been doing? Well, it's a bit choppy actually last week. We'll go ahead and look right here. At the 5-day, well, actually wasn't too bad. Nice 10% for the Matte Black, the Venerable Matte Black. Very diversified portfolio. Nice $10,000. It made last week in the 5-day period, but we had a couple portfolios actually lose money. The Delta DTS. Most of these portfolios are actually closed, but several of them are open. In fact, the MapDT version 4.0 HR is open, and of course the MSAU DT, which, as you all know, is part of the Ultimate line. In fact, the only one we track on a daily basis, but the Ultimate line of portfolios that we've launched that really are simply the best performing trading models that we offer. Essentially breaking out to new equity curve highs, and as you can see, it's certainly in the numbers that the MSAU DT garnering another 32.6% last week. For every $10,000, 10K portfolio, for every $10,000 of a unit, you made $3,260 last week. So it continues to outperform. In fact, it outperformed yesterday. I don't know if we have that. Yeah, here's yesterday. So look at that, 146% over the last 58 days. The portfolio has garnered, handily outpacing, almost doubling some of the leading portfolios. So as you can see, going through and cherry picking the best trading models and putting them into an elite portfolio, the ultimate portfolio, you can see is really paying dividends. In fact, it outperformed yesterday just by remaining on the sidelines. The MSAU DT, and of course the Ultimate S and the Ultimate DT, and this is part of the MSA line, which, as you can see right over here, if you just go to the Ultimate MSA portfolios, you'll actually get the Ultimate portfolios as well as the MSA portfolios. The Ultimate portfolios are down here. Ultimate DT, that's about 18 trading models. Ultimate S is about 24 trading models. And the smaller versions, you can trade these with $25, $50, or $100,000, depending on your risk profile, reward to risk profile. Then you have the Ultimate MSA DTs, which again are $10,000 portfolios. F is fixed fractal compounding. You can certainly take advantage of the compounding nature and leverage your profits into more returns. And here's, of course, the Ultimate MSA DT right there. And, of course, the swing version, which has the MRS EM. I apologize for the nomenclature, but there you have the Ultimate MSA DT. And you can take a look at all those portfolios. Again, all of them have the very best trading models, their updated returns right here. In fact, right here you'll see updated returns through mid-June. We generally update quarterly, so there you have some updated returns. In 2007 and 2010 portfolio returns, there you can see all of our ultimate portfolios, the Ultimate S and the Ultimate DT. But going back, you can actually save 20% right now. Go ahead and click Add to Cart on the Ultimate MSA DT and enter promo code VIDEO. If you're interested in this portfolio, it's already been entered there. So instead of $2,000 for 3 months, you can save an extra $400, just $1,600 on a 3-month subscription to the portfolio. So if you have any questions, hope the analysis has helped you. If you have any questions, go to the website, chat live with the support team, or shoot us an email to admin@MiniAnalyst.com. And again, hope you enjoyed it, and we'll see you next time.